What's going on out there? It's Wednesday, April 13th. I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down the headlines and tell you what's really moving these markets. So, favorite time of the year? Actually, favorite time of the quarter. We have earnings season. Shouldn't say the year, the quarter. And Daniel's smiling. I'm bringing Daniel Creech here because we love earnings season. That's where we find the most ideas. Listen to conference calls. We share this with you. Especially over the next couple of weeks, but we do this every single quarter, have a lot of fun. It's the best way to find new ideas and what's going on throughout the industry, throughout the world. These conference calls are amazing. We all have access to them. And we just saw Delta, JPMorgan, and BlackRock, three major companies, report, and going to start breaking them down. David Creech, how's it going, man?
Good morning, Frank. Things are good. Another beautiful Wednesday here in Amelia Island.
So you were going to tell everyone exactly what to do with each of those names, starting with Delta, right? And how you're going to be guaranteed to be correct, right? That's what you said before we started?
Probably, more than likely. I think that. I don't know if that's word for word, but that sounds about right.
All right, let's start with Delta. Delta had really good numbers, mostly due to their pricing power. There's pent-up demand there. People want to travel even more. We're in Florida. We're like, what do you mean? We've been traveling for, 18 months, but there's a lot of people out there that haven't been traveling, depending on where you live and what state you live in. And you're seeing that, which is like just amazing demand, which is coming out of this, which we saw in the numbers. But Daniel, what are your thoughts on this, and how do you feel about Delta quarter?
Overall, it was good. This is a great example of how there's a difference between the stock performance and reality. The premium segment, Delta, capacity is the big thing to look at. Hey, what was it compared to? How was your quarter compared to pre-pandemic, pre-coronavirus lockdowns, et cetera, et cetera? Capacity was around, they guided for the third quarter or second quarter, Frank? Capacity and revenues are going to be between 90 and 100%, 93, 97% of the second quarter in 2019, excuse me. That makes a lot of sense. However, they're making up for it on premium seating, i.e. more expensive. Demand is built up. They're taking advantage of that. They have pricing power. We've talked about that a lot in the past for the environment we're going forward. My point to all that is this is a great stock. It's just a bummer, Frank, because the more money they make means what? The more we have to pay to travel. So this is how you get back. This is how you benefit and hopefully make some money, make a lot of money because the risk reward is definitely in your favor. The CEO, I don't know if you caught the comments on the CEO on CNBC, Frank. Did you catch any of that this morning?
No, I wasn't able to catch that this morning. No.
This isn't a word for word, but he said, listen, we have pricing power. People are done remodeling their house and home. They want to fly somewhere to go look at somebody else's house and backyard. Cool. And that is a good point. Now, take that with a little salt. He's like all of us do, we're confident in our own. We're talking up our own book. He's obviously going to be bullish on airlines. However, when you see the prices moving higher, capacity is still going higher and everything else, that's a great sign for this in a turbulent market. Oh, nope, that's a terrible pun, Frank.
I'm going to be honest with you because as you were, I'm looking at numbers and digging through this. And this is one of our holdings in our portfolio, in our CRA portfolio. And here's why everyone should buy this stock immediately right now. When I look at the numbers, Daniel, here's what I get. So in 2021, he had revenue of $29.9 billion, right? So that's COVID. Those are reflective of COVID. 2022, they're going to go to $44.8 billion. And then look out to 2024. This is about a little over $50 billion. When you look at EBITDA, we're looking at $2.2 billion this year, which is expected. They lost $2.6 billion last year. That's the COVID year. That's going to go to $5.5 billion in 2023 and $7.3 billion. All right, you're looking at a company where earnings are going to explode from $1.30 this year to $8.30 by 2024. Their PE ratio is 4 based on 2024. Next year's estimates is 7, and this company is growing and they have pricing power. And you have to keep in mind, this is why I love the name so much. And again, it's been tough, right? It's been a tough road and it's been crazy. But here's what's scary. COVID is mostly in the rearview mirror. Okay, mostly in the rearview mirror. And they reported these results with oil prices surging to 130 that quarter and are near 13-year highs. These guys are blowing out the numbers under some of the most difficult conditions. What do you think is going to happen when things ease? And even if the market does come down, you're going to see people reining spending. They're still going to travel. People are still going to travel. They haven't traveled. Most people have not traveled still. They're still nervous to travel. And you're seeing that now saying, hey, we're going to be profitable going forward and that we are hitting numbers that were pre-pandemic. That to me, that's amazing because you're going to see a ton of demand for this name and it's dirt cheap. So even if we're bearish going forward, at least I'm bearish going forward on the economy. Yes, we know the Fed's going to raise rates. There's a whole bunch of stuff going on. We know oil prices are high. They're reporting these results during extremely, extremely difficult conditions, meaning that they're great operational. And that's why I love Delta, because operational, they're one of the best. They know how to cut costs. They know how to figure things out. They know when things are bad, exactly what to do. And man, it's been one of the toughest environments because you're not just looking at COVID. All right, everyone got impacted by COVID. But you're looking at, with Boeing planes and stuff and different orders because of their MAX, which was tough for the industry. Different strands, we saw COVID, different lockdowns in different areas. Now we have wars with shutting down certain areas. You're seeing, places like Europe and maybe those economies a little bit weaker. But the problems that they're dealing with and to put up these numbers is absolutely incredible because it's dirt cheap. It's reflecting that it's going to be a horrible environment for them. And they just showed, hey, if this is the horrible environment it's going to be in, we're kicking ass right now. And seeing these numbers and going forward and buying a stuff where earnings are going to explode, you can't really say that for everyone. I mean, you're looking at companies, you say, how do you forecast going forward? I mean, people are going to travel. I don't know if people are going to buy certain things, but you know that they're going to travel. All right? You could talk to all of your friends. You could talk to family members. You could figure that out by yourself. How many people listen, we got to get out of here. We have travel. They have pricing power, massive pent-up demand, and COVID is mostly in the rearview mirror. And they showed that they could operate with super high oil prices, which I don't know if oil prices are going to stay at these levels, and maybe they come down a little bit more. We'll see, depending on Russia, and I know that war's getting even worse now. This week's supposed to be terrible as that war moves to the east. But Delta's numbers, man, holy cow, is that impressive. And my fault that I didn't get the pun because I was actually reading it and looking at that number going, holy shit, is this how much to actually, because I didn't look at 2024. I looked at 2023, and I was looking at 2024, and I was reading it. I was like, holy shit. I was like, is that number right? And I just had to check it. But, I mean, the numbers that these guys are, and listen, these numbers that I'm telling you are close to consensus, but they're Goldman Sachs numbers, and Goldman Sachs has a neutral rating on them. All right, so this is a fair assessment. When you're looking at EBITDA going to $7.3 billion from $2.2 billion, right? From now till 2024, which is not that far away. Holy shit. It's hard to find numbers like that almost across the board. I mean, those are extreme growth numbers of an industry that's been really terrible and beat up, but these guys have pricing power. There's not a lot of competition in the space. People are going to fly, and these guys are great, especially when it comes to operations. All
right, so bullish on Delta. The only downside there or big headwind is if you go into a recession. But if we want to segue into JPMorgan, that's not going to worry about because Jamie Dimon, CEO of JPMorgan, says that he doesn't believe the U.S. will be in a recession this year. You say what? Now, he's talking, sorry, let me leave it to me to ask you a question and then not let you answer. He's probably talking, if we had to guess, about recession on paper, meaning back-to-back quarters of negative growth. Yeah. We'll give him that context. The takeaway there is he highlights, hey, the consumers are still in strong shape. Yes, you don't have as much money sloshing around in form of direct payments in governments as you did during the coronavirus. But he points to people, same thing with Delta, pent-up demand. People are willing to pay higher prices for things right now. Who knows how long this is going to last. But just like we talk about the spill in the river, it depends on how long it takes to get downriver, Frank. I was impressed with JPMorgan's numbers. I mean, they're a big bank. They're going to make tons of money off fees and everything else. They did a big buyback share repurchase program of $30 billion. But one thing that stuck out to me was a quick quote from Jamie Dimon. JPMorgan generated $30 billion in revenue, $8.3 billion in earnings, and a return on capital invested of 16%. Right outside of that, Frank, is damn good results. If you just spit that out of a machine that you want to invest money in, those are fantastic. That's along with putting aside an additional $902 million for credit reserves, largely due to higher probabilities of downside risk, i.e. Russia, inflation, things like that. Here you have a bank making a lot of money, putting money aside for higher credit losses going forward because of the risk, doesn't see a recession. Yes, it's going to be volatile, but the largest bank in the U.S. is telling you you don't have anything to worry about today, in my opinion. Not saying he's completely right. I'm just saying for the bulls out there and to be selective on stock picking, that's a good thing on consumer balance sheets remaining to be strong from their perspective.
Yeah, and
I wouldn't buy JPMorgan here. I'm not a big fan of them, but it's still good.
Yeah, I mean, that number is pretty big, and that's what everyone's talking about, the $900 billion that charge to build credit reserves. So if they're putting that much aside, you got to figure it's got to be around $250 billion, maybe $200 billion. They're always they're very conservative, and I'm a big fan of Jamie Dimon. I think he speaks exactly from the heart. I don't agree with everything he says, but I think he's very truthful. One of the smartest guys that you'll see in banking and finance and stuff like that. Again, I don't agree with his point on Bitcoin and blockchain, even though he's in blockchain now and whatever. And but when I look at these numbers, I think JPMorgan is a screaming buy for anyone who wants to hold this stock longer than 12 months. It's paying a 3% yield. It's great. The recession thing, I don't know. I mean, does it matter if we're in a recession 9 months from now or a year and a half from now? I know that we're going to be in a recession. I mean, if you don't think we're going to be in a recession, you need to see my briefing, which I published. It's going to be published later today for Curzio Research Advisory members. That's a product I think we sell for $79 a year, right? So most of the people listening to this, I believe, own that product. But we just had a whole entire briefing showing of, all the data I'm seeing, the cracks of foundation I'm seeing over the past couple of weeks. And I shared that data with you, data that I'm not hearing at all on TV or anything like that, but we are hearing about the rate hikes, of course, and that's going to be good for this company. We are hearing about trading revenue falling. Yes, we're going to see that, but we're all going to see unbelievable volatility, which is something Jamie Dimon said as well, where, he's like, anyone not expecting that is absolutely crazy. I mean, we have war, we have China, the lockdowns, we have, everything going on with interest rates going higher, the Fed going crazy, has no idea what they're doing right now. And nobody knows what they're going to do, right? We're all like, okay, they're going to raise, but, hopefully they do, because they got to raise a lot. But when I look at JPMorgan's results here, they beat the numbers, and the headlines are like, well, profit was down 40% from last year. Okay. And they're talking about the credit reserves, which, they're being safe. And you got to build up credit reserves because interest rates are going higher. There's a lot of leverage out there. That's smart, right? So he's anticipating that, we had a good 12, 13. I mean, there's nothing. Nothing was going bankrupt. Almost nothing. I covered these statistics in past podcasts showing that, if you are bearish, and this was a year ago, I mean, you're seeing hardly any bankruptcies. You're seeing, companies paying their bills, everybody paying their bills. Again, people want to go crazy about debt. You have to worry about debt when people stop paying it. Everybody's paying it, but it's going to get harder. And this is what I cover in that briefing. You can get 5 p.m. tonight if you're a CRA subscriber, but it's getting harder. It's going to get harder and harder as interest rates go higher. And that's one of the things that he's concerned about. However, with that said, if you're looking at these numbers, I mean, they beat the earnings, right? And they beat the earnings pretty handily, and that included 13-cent impact from Russia, which you're going to see during earnings season because everyone's like, we're not doing business with Russia. We're not, right, Dan? No, we're not doing business with Russia. It's going to hurt your freaking earnings, right? So some of these companies have leverage, right? So it's Paco companies, you have agriculture companies, you have leverage, right? So it's all nice to say, oh, you know what, we're not doing it, but it's going to show in your results. So a 13% charge for that, and the $900 billion charge for credit reserves. So with those two charges, they still beat earnings. Mm-hmm. He included that. A lot of people are saying, well, without that, this is what earnings were going to be. Right? So I cover earnings, you cover earnings, you see that a lot. Minus these charges, he put those charges in there and still beat estimates. So you're looking at a company right now that's trading at 3% yield. It's trading at 1.4 times tangible book value. That's how you value banks with tangible book value. To put that in perspective, that's where it was around 2017, and it hit that level several times, almost every single time from then, outside of like a 7-8 month period with COVID where everything really came down, went back up. Every time it comes down to this level, it pops every time. So I know if you're a charge, you're looking at this saying, holy shit, it's breaking down, it's going to go to 100, and I get it. And, they say that until the chart no longer works, where money's going to filter into the good names. This is a good name that's getting it done. They're smart to put those reserves aside. It's a 3% yield. They're going to see an incredible boom to profitability when you're looking where interest rates are expected to go. And it might hurt trading, and that's what we're seeing. You're seeing a lot of these investment banks with trading and maybe housing and stuff like that. But now you're looking at they're going to make up the difference as interest rates go higher, which is more safer for them and most of these financials. But this is one of the names that you have to own in this crazy environment because it's a great play on inflation. It's better than keeping your money in the bank and you're losing money on the massive inflation. Now, at least you're getting paid 3% yield and a company that's going to benefit and their earnings is going to increase due to inflation as they make that, that net interest margin is going to, get wider and wider, and they're going to make more money and margin is going to increase. But this is a name that I would be buying. Nice.
So you're, all right, buy Delta, buy JPMorgan. What about, are you ready to go into BlackRock and Larry Fink?
Yes. I mean, okay, you can start with BlackRock. These guys, I'm just going to say the one thing. You look at JPMorgan, Daniel, and they have a little less than $4 trillion in assets under management. And when you look at BlackRock, it's pushing $10 trillion in ETFs and assets. They had $9 trillion and last Q1, and this Q1 it's up to $9.6 trillion. Man, you want to talk about influence?
Yeah, absolutely. It's just wild. Taking a quote from Larry Fink, BlackRock generated $114 billion in long-term net inflows in the first quarter. Just in the first quarter, you have $114 billion in long-term net inflows. They talk about how it was positive across all product types, investment styles, and regions. This demonstrates the breadth in the asset management platform. Its electronic traded funds, ETFs, delivered $56 billion in net inflows as clients continue to use their products for efficient capital allocation, liquidity, and management risk. The big takeaway here is these guys make tons of money on fees. I'm not saying it's a bad business. It's a great business. The issue that I always poke fun at with Larry Fink and these asset managers is their influence and politicalization of the economic forum and markets, Frank, because as you just alluded to, you can throw your weight around. And we've already talked about this with ExxonMobil. They got small minority holders of ExxonMobil ordered to the board because they have such voting power in all the shares that they hold, and they own massive shares as all this money comes into it. I wouldn't buy it here, but it's great business. I think
there's better businesses. I think there's much better businesses to buy.
Like the ones I think
some of the banks, and also you mentioned too private equity, and this is one of the names that you're going to get in CRA because these guys are sitting on tons of dry powder. I did very, very well in KKR, and I think my investors did well in KKR. And this was when I recommended it after the credit crisis because when you're seeing tough times and businesses have trouble, they have to turn to these guys, and these guys are great at dictate the terms or the credit terms and everything they want to do. And KKR was able to buy so much real estate that Europe and the U.S. and even Europe, more to the point, was forced to sell, right, to reduce their exposure to some of these assets, right, to increase their ratios when all these regulations took place 2008, 2009, and they were getting stuff at pennies on a dollar, right? Why? Because they were the only people that had tons of money. I mean, the one that we're recommending has, I think, it's over $80 billion in dry powder. A lot of these guys, $80 billion in dry powder out of their $300 billion in assets under management. These are the companies you want to own because as it comes down, these are the guys that can pick and choose and say, okay, well, here, we're going to get this credit. We're going to get it for nothing. We'll be behind you. But the terms that they dictate and the position that they're in, when you have this kind of cash, you are king in tough markets. And that's what I think everyone's expecting going forward. So when I look at BlackRock, is it, if you own it, I wouldn't sell it. That's fine. But I just think the JPMorgans are better. I love the private equity firms better if you're looking at finance, within finance, and those are better. And I just want to say this one thing, because I know you've been on private equity, but I want to say one more thing about BlackRock. Do you think it's fair, Daniel? Because the influence they have is, and most of you out there are part of BlackRock, right? If you're in the 401ks and ETFs and things like that, and a lot of this is retirement money, right? This is retirement money. So, you're checking a box and saying, okay, I want this, and then they go and buy, and you're in BlackRock. So now you have all these people in BlackRock, and now you build up to $9 trillion assets. And literally BlackRock, I want to say, is in every single stock that you'll find. Almost every single stock that has a market cap above, say, 250 million, you're probably going to see BlackRock's name there. You're going to see Vanguard's name there. You're going to see Fidelity's name there, right? So they're managing other people's money with all those opinions and stuff like that. But now they're able to have this mass, pull them all together, and it's BlackRock that's speaking. And they can get behind climate change like they did with Exxon and said, hey, we're voting. We're going to get these guys on the board, and they can do whatever because they have massive voting power. And that's what you're seeing right now with a lot of companies. I think Shopify did this as well, where, he wants more power. Again, the whole world revolves around power, right? I'm reading Animal Farm with my daughter. Holy shit. I haven't read it in a long time, but man, you can see what's going on right now when it comes to power, right? How things change. You tell everyone things are going to be different this time. And then as you go along, you see that person who's in charge is trying to get as much power as they can. And that's what they're doing. BlackRock is just a very powerful company. But do you think it's fair because they're able to have one opinion because they're BlackRock, yet everyone who's in their funds, and sometimes you're forced to be in their funds depending on what company you have, what 401k plan you have, but now they're able to push their weight around to get their agenda. And I have to be honest with you, that agenda is, from what I see with BlackRock and a lot of these firms, is a lot of it has to do with woke culture, which is pretty crazy. So is it fair? I don't know if it matters if it's fair, but how you pool everyone's money who, have different opinions. And even if you were if BlackRock is super conservative and doing it, I would say the same thing. It's just, to me, that's a problem there. That's a major problem because these guys have massive control, and it's the control because they're having all this control over people's money, and they're not really representing their opinions, I think.
Not at all. I don't think it's fair at all. But in the fine print, when you invest with these asset managers, you're giving them the power and or whatever to vote for you. This could easily be fixed like most things. You can simply, Frank, a lot of people out there get emails if you're on a brokerage account when there's a vote or something at the annual meeting. Most probably ignore that because most individual investors don't have a large enough stake to make any voting influence. You could easily just say, if you buy it through an asset manager, Frank, why couldn't the SEC just say, hey, and you're obligated to send the information out on when and what is up for vote. If they ignore that, then those votes just simply don't count at all. And you take that away from BlackRock. They're not going to do that because, again, it comes back to power and the big transition of, listen, us individuals aren't smart enough to make decisions on our own, Frank. You know that. That's why the powers that be want to do everything for us. No, it's not fair, but unfortunately, no, it doesn't matter. That's the reality that we choose to live in. So, and if they were conservative and agreed with me on everything as they should, I still wouldn't think that's good. You should still be up to the individual.
And people
that's
say,
not going to happen.
well,
that's okay.
They do get the votes and they'll get in the. I don't know if you own stocks, and Daniel, you do too. When you get that big pamphlet in the mail. It's usually like 50 pages, 30 pages or whatever. It's all garbage. And really, they're hiding one thing that they're pushing through. Right? So,
compensation plan.
And it's on page like 32 on the bottom. You know what I mean? And it's so funny when they do that shit. I mean, that's why, the lawyers and politicians that make the laws and stuff like that. It's so funny that, listen, we know why you're sending this out. There's one reason. It's because of a certain vote that you want particularly, but you're going to throw everything that you possibly can in there. This way, nobody even reads a shit. And most people throw it out. And if you don't respond, then that's the vote. So, it is what it is, but is it fair? No, I don't think it's fair. And again, whether it's, far left or far right cultures, it's just, for them to have that power to really support and have an agenda is, I think that's a problem. I really do. We're seeing that as a problem. So,
yeah, but it's not, I don't think, I agree. We don't think it's fair, but it's not a reason to stay away. They've made some changes at ExxonMobil along with other things in rising prices in energy policies and all that. So we use that to our advantage in Dollar Stock Club. So that's how you play that game. You don't sit on the sidelines and not play. You just understand the rules and play along with them.
So Larry Fink is the man, right, when it comes to BlackRock, and Jamie Dimon is the man when it comes to JPMorgan. And it's kind of funny because at the Bitcoin conference, which was last week, which we don't talk too much about. And when I say Bitcoin conference, guys, this conference is 100% Bitcoin. Because even Dale mentioned it too. It's kind of funny about Ethereum. If you mention Ethereum, they're like, hang you.
Yeah.
Right? I mean, so that's why, like, going there is Bitcoin. It's not going there where you go into a conference where you're going to get, you could network and get ideas, but it's 100% all diehard Bitcoin. That's it. It's no altcoins. There's no nothing. That's what it is. It's everything around Bitcoin. And then you had, Peter Thiel. And I think it's Peter Thiel, and you say Peter Thiel, right? But I think it's Peter Thiel or Peter Thiel. I don't know.
I say both.
I like making fun. My New York accent, everything. It's just, I don't really pronounce things right anyway, but whatever it is. But I was always a big fan of his. I know they paint him as a political picture now, but I was just a big fan because, he's smart. He's really, when I see him, I think, I trust him. And if you see him compared to some of the other people on TV selling these shitty SPACs, I just think with him, he has those results. And, I just feel like I have more faith in what he's saying than almost 99% of anyone else that's talking, especially when it comes to SPACs or anything else. But he called out a lot of people in his speech at the Bitcoin conference. And he said, what did he say about enemies?
Yeah, he just came out with an enemies list. And Larry Fink, BlackRock, that we were just talking about, is number 3 on that list. Coincidentally, JPMorgan, Jamie Dimon is number 2 on that list. And number 1, public enemy number 1, if you want to have some fun with that, is Warren Buffett himself. Now, let me give you the short version here first, and we can back into this over time. What he is saying, Peter Thiel used this, and I encourage everybody, just DuckDuckGo or Google it, Bitcoin Conference 2022 in Miami. You can watch the YouTube live streams from day 1 through 3. You can watch different segments, and I'm going to highlight a couple of those real quick. But Peter Thiel's was interesting because you talk about a guy that come out swinging. I mean, he played a version of himself, and I believe 1999 was still at PayPal. He was talking about how currencies were going mobile and all that. It's really neat to see. And then he admitted, hey, I got a lot wrong back then. His big takeaway on the public enemies list is he doesn't want to compare Bitcoin to gold, even though he thinks it's replacing gold as a store of value. Bitcoin is roughly 800 billion, give or take whatever current price it is right now, versus a 12 trillion market cap in gold. He thinks a better comparison is Bitcoin to the S&P 500, Frank, which is a whole different other topic when you talk about the value of it and how it should be perceived. He believes it's going up a lot more, than current prices. The biggest hindrance of Bitcoin being a lot higher in price terms and the money flowing into it is his enemies list. That's the Warren Buffett, the BlackRocks, and the JP Dimons, because and he even said this, they're making a political decision when they choose not to allocate money into Bitcoin. That, I want to unpack that at a later time. We can maybe do a segment on that. That is a huge statement for the community, in my opinion. Mm-hmm. He is literally calling out them, and he's encouraging the community to push back and to for lack of a better word, just like we see in politics, when you don't like something, what do? You protest, you grab a megaphone, you shout, you scream, you grab attention. He wants them, and I think the community will do this, and you're already seeing adoption through mass institutions. We've highlighted in the past Mass Mutual, one of the largest mutual insurance companies and the oldest in the country. They've allocated a little bit to Bitcoin, nothing to move the needle in terms of their allocation, but the process in general. That calling out those top 3 people, and he was calling them names and everything else. Of course, people were cheering and ranting and raving because he's preaching to the choir there. I want to timestamp this and see about allocation because we've talked about Galaxy Digital and the influence that they have and the Middle East money flowing in and all the huge partners they work with. But I encourage everybody, you got to go watch these things because he calls them out. He compares Bitcoin to Ethereum. He thinks Ethereum is going to be more like a Visa payment thing. Bitcoin is more of a value, hold over time type deal. I didn't take as a negative against Ethereum, but some articles that I read perceived it that way. I really don't care about that. Are you ready to chime in here, Frank, or I feel like I'm rambling at this point.
You've been really, really covering this, and that's what I love. Because,
how much time do we got? I want to highlight one other thing that people need to turn to.
No, go.
So on the Bitcoin mining, they have a couple of panels on Bitcoin mining, and we've talked about this in the past, and one of the reasons I continue to get bullish on the sector, Bitcoin and other cryptocurrencies in general, is because last year at the Bitcoin conference, I thought it was very authentic. This year, I think it's much more focused on how they need to fight back. I don't think it's a coincidence that Peter Thiel is talking about calling out these enemies list and pushing back and encouraging people to allocate capital in massive amounts of way to this space. It's not a coincidence that they're basically starting a super PAC, a political action committee, to back like-minded politicians. They understand, and what's cool is within this tent, within this conference, Frank, while it's all about Bitcoin, there's something for everybody. You have the Bitcoin people that are okay with it not taking over the world. You have the Bitcoin, but they don't want any other cryptocurrencies. You have the Bitcoin people that they don't want anything. I mean, there's people on there that say they don't use cash anymore. Mm-hmm. It's cool to be off fiat currencies. Hey, that's fine. Teach their own. The world's big enough for all, in my opinion. But there's so much to take away from this conference. That's why everybody should look at this. And when the argument is against Bitcoin because of its green footprint or lack of green footprint, its energy uses, that's when they attack it emotionally, and I say they, meaning asset managers, politicians, governments, when they attack it from an emotional standpoint, you need to really take note because that's not the truth. You don't argue how much energy usage it uses when you don't talk about how much every other industry uses in energy finance or financing and energy usage. And there's a real good quote here from the co-founder, and I hadn't heard of this, co-founder of Core Scientific. And he says that whenever you hear these fear stories, and Newsweek did an article back in 2017, Frank, that by 2020, basically the Bitcoin miners and energy uses would use all the power in the world. Mm-hmm. Just like global warming stuff. That's only a couple years late, but results don't matter to these emotional arguments. He calls out, this Darren Feinstein calls this out, that article out, along with the World Economic Forum article out. But he put it in perspective. Total energy generated annually is 160,000 terawatt hours globally. Okay. That's according to his data. You guys can fact check that or whatever. I am not smart enough to explain to you how much crazy power that is, Frank. I Googled it. There's some fun examples. You can do the same. The takeaway is of the 160,000, total energy usage of the Bitcoin network is 220. Mm-hmm. That's 0.13749, whatever. Yeah. I mean, the point is, it is literally a rounding error.
Yeah, I mean, most smart people know it's a political thing and it's a fucking joke.
Perhaps so.
Yeah.
But the majority of people, I think, would admit that the headlines that they see around Bitcoin and energy usage is negative, not positive. Yeah. And that is going to start to change as the community itself pushes back. And I don't see how that's not crazy bullish for it. And there's several segments or panels about different mining and energy grids and energy uses that I think everybody should, just bump the speed play, the feedback up to 1.5 or 2 times. That cuts down, you can get through this more quickly, but everybody ought to listen to some of those panels because there's a lot of great information.
Yeah, I mean, the information, that's the thing. Man, I'm going to say something that's going to get me in trouble. I don't care. But the majority of people don't know better. Okay, they don't. They're not going to do the research. They're going to listen to someone on TV. They may listen to me on podcast, which I always say when you listen to this right now, do your own research. Check everything that we say. I mean, you could disagree and whatever, but Bitcoin, even this conference, really focused on it. It focuses on it all the time, every year to have it, is capitalism, right? So you want capitalism, And anything that is, about capitalism, you're going to have one group of people that attack it. So that's, the climate change. We hate capitalism. We don't want it. And, they're going to attack it. When you look at the numbers, it's an absolute joke, right? It's a rounding error of why we shouldn't be using Bitcoin. I mean, should we look at it and say how we can make it better and use less? Yeah, use less electricity. Yeah, that's fine. Use alternative energy to power this stuff. And some of them are using coal. It's been thrown out that, there's some projects that are using coal to power this and power computers and mine and stuff like that. But, it's when I look at that, it's kind of a joke. But a few things here. So calling out people is okay. I disagree with a lot of people on TV, and I don't call them out. I'll call out certain people. And you guys know what I'm talking about. And the reason why Peter Thiel is calling out certain people is because when that person disagrees with you, that's fine. But when they're saying that you're basically an asshole for buying Bitcoin, which is what Warren Buffett is saying, Jimmy Dimon is saying, Larry Fink is saying. They're saying it's going to zero. You're an idiot. It's bullshit. It's tulip mania again. So you're really attacking the integrity of the people who really believe in this. Then you have to stand up for yourself. Okay, then you have to stand. So that's a different. It's not like, because Peter Thiel's not the type of guy that just rips everybody apart. Again, I love when people have a different opinion. You could disagree, that's fine. But when people are saying no because of the way you think, you are a freaking idiot. That's why you have Peter Thiel said enough's enough. He said, what did he say? Warren Buffett called him a sociopathic grandpa from Omaha. So Jamie Dimon, Larry Fink, BlackRock, he says opposed a revolutionary youth movement behind Bitcoin. And there is a massive youth movement behind Bitcoin, right? So, Michael Saylor, I thought was interesting too at that conference, saying, he was upbeat about Washington, that they're going to put regulations in place to safeguard investors and prevent fraudulent activity. That's what we want. Hopefully they don't overregulate, but you're seeing that, and a lot of the big people who manage us, that's what they want, because you're going to see they're not allowed to come in unless you have some kind of regulatory framework. And we're talking hundreds of trillions of dollars on the sidelines that could come into this industry. Even if it's 1%, you're looking at Bitcoin going up tremendously. So the conference is 100% Bitcoin. I like Peter Thiel's speech, and I get it. I wouldn't rip him apart for saying those things. And we know that Warren Buffett is the greatest investor of all time. Larry Fink and Jimmy Dimon are people that respect it, and look what they did with their businesses. Unbelievable. But when they're really coming down, and the way they come down, the way they talk about how, you're an idiot if you buy Bitcoin, then that opens a door for you to respond like this. So I credit Peter Thiel. I like the way he responded to this. One thing I will say, I think they should stop having these freaking conferences, Daniel, because every time they have them, Bitcoin crashes, right? I mean, you look at last year, I did that in June. It was at 45,000, went to 39,000 a few days later. It was at 40, it was 40,000, went to 33, and now it's like 40, it was like 45, I think, when it started 44, and, it's up over 40 today. It's going higher a little bit today, but still you saw, like a 10-15% correction every time they have these things. But maybe we should, think about that before we have these massive Bitcoin conferences, because it almost happens on a regular basis, like just that week, 2 weeks after. And of course it, ends up being a buying opportunity, but still, maybe we should worry about that. But yeah, Bitcoin conference now over. Pretty cool. Good stuff. You can find all those highlights anywhere. There's a lot of people that are covering it. And some really good speeches that you can find all over YouTube. So really cool stuff. And Daniel, thank you, because I know you really, really covered that and went over a lot of stuff. Because right now, Curzio Research, we are doing, we're in the middle of a very, very, very big deal. So something that we're doing that, I'm going to share with all you guys probably in a week and a half. That we're very, very excited about. A lot of traveling, a lot of research behind this, which is really cool. And I'm going to share that with you pretty soon, which is awesome. So, Dan, thank you for, going all out, listen to all that stuff. I had tickets to go to the Bitcoin conference, but I couldn't go this year because it was just too crazy and too busy, but really, really good stuff. So, Daniel, listen, we covered a lot today. Earnings.
Have a great Wednesday.
Bitcoin, lots of fun. And guys, if you're a serious subscriber, Curzio Research Advisor subscriber, just recorded that special briefing. It's going to be published around 5 p.m. today. So please pay close attention, especially if, most of you listen to this podcast on equities, on crypto, on everything. I'm going to show you how to protect yourself, because it looks like this market could come down a lot more over the next 12 months and even longer. Not the whole entire market. There's pockets that are definitely working, but you need to position your portfolios properly, because you can get really killed if you are in the wrong sectors. I'm not just talking about growth. I cover all of this. It's very detailed. I'm going to show you examples of how the foundation's cracking. We weren't seeing the foundation crack, right? We always had positives where wage growth was going higher. We saw, China was going to ease, but now, you're looking at these things, and there's slowly all those positive catalysts are going away. China's seen inflation go higher again. All right, it lowered in January, February. Now it's going higher the past 2 months. So we'll look at the growth engine of the world, saying it's going to be very difficult for them to ease when you have inflation going much, much higher there now. You're looking at wage growth starting to slow. You're seeing demand starting to slow, believe it or not. And it's a big deal for car companies, for chip companies. These guys are just pedal to the metal. We need as much inventory as we can. But you're starting to see demand fall for the first time in a long time, meaning that not all companies have pricing power. So just be careful. Just be careful out there. You're going to see a crazy earnings season. It just started. Over the next couple of weeks, Daniel and I are here for you. We're going to be covering it again. Thanks for coming on. And really, really good stuff. And if they want to reach out to you, Dan, what's your email?
Daniel at CurzioResearch.com.
He always smiles when I say that because it's so easy to say, but I'll never say it. Frank at CurzioResearch.com. If you have any questions or comments, guys, feel free to email me. Enjoy the day. I'll see you guys tomorrow. Take care.